Good evening and welcome to the Wall Street webinar. This webinar is hosted by the Robert Toigo Foundation and the Riordan Programs Alumni Association. My name is Maureen Enam and I am a registered client associate at Merrill Lynch. I am also the Director of Riordan Program Affairs for the Riordan Programs Alumni Association. We hope to spend the next 45 minutes to an hour taking you through the very basics of a Wall Street career, both the definitions and possibilities, as well as suggestions about how you can begin preparing now to start your career in this exciting industry. There will be a chance to ask questions at the end and to follow up later for more information. I and a few other professionals will lead you through the webinar tonight, and you will meet the others as they speak. Look inside specific roles on Wall Street, distinguish the basic characteristics of different professionals on Wall Street, discuss some of the myths about the industry, and then finally, to provide you with a few steps to help you on the road to a career on Wall Street. So if you are ready, then we'll begin.
As I said, my name is Angel Stewart. I'm the Director of Talent Management with the Toigo Foundation. Let's begin by talking about the difference between commercial banking and corporate banking. The biggest difference between an investment bank and the bank that you and I use, often called a commercial bank or a retail bank, is who they serve. I'm sure many of you have an account at Bank of America or Chase Bank or Wells Fargo, or maybe even at a credit union in your local city. Our accounts there are with the commercial or retail division of the bank. The retail banking side of things is for individuals and small businesses, whereas corporations, on the other hand, are on the corporate banking side of things, which we'll talk about in just a minute. Let's look at an example of how we use a commercial or retail bank. Let's say that you want to buy a new Ford Mustang and it costs $20,000, but you only have $2,000. So you go to your local bank, a commercial bank like Bank of America, and they'll help you finance the Mustang. Since you don't have the entire $20,000 that you need to buy the Mustang, they'll help you create an arrangement or a finance plan to purchase the car. Financing that they put together would probably include your $2,000 as a down payment and then a loan for the remaining $18,000. They will assess an interest rate on that loan, and that's the they charge you to borrow the money, which would be based on their evaluation of you, your assets, your savings, your credit history, which determines your ability to repay the loan. Now, thanks to Bank of America, you're the owner of a brand new Mustang. Let's look at a similar example for corporations. If Ford Motor Company decides to build a new factory so that they can make more Mustangs for you to buy, they need about $20 million to do this instead of the $20,000 that you needed to buy the car. That's a significant difference, and because of that difference, the local bank or the commercial retail side of Bank of America that you used can't help with this. And so Ford would go to the division of the bank that deals with corporations, and that is called the corporate or investment banking division. So in this example, the corporate bank would then advise Ford about how they could raise $20 million. They would help the company develop a financing plan, just like the commercial bank helped you finance one Ford Mustang. This division of the bank is not a bank for you and I. This is called corporate finance because they are providing financing services to corporations, not to individuals. Let's look at investment banking and Wall Street from the perspective of a corporate financing deal that's been in the news recently. In its largest acquisition to date, Facebook purchased Instagram for nearly $1 billion in cash and stock. Instagram had about a dozen employees in its San Francisco offices, founded in just 2010 by Mike Krieger and Kevin Seastrom, and the company was valued at about $500 million. Facebook was valued at about $67 billion, so in this deal with Facebook, Instagram was acquired. That's the A in the term M&A, or mergers and acquisitions. If two firms of approximately the same size and value come together, that's a merger, or the M in M&A. You might remember when AOL and Time Warner joined each other or merged. That was a merger, or the joining of near equals. But let's get back to our Facebook-Instagram deal. Now, the best example of an acquisition, an investment bank or corporate bank would have been involved in advising Facebook about how to finance this deal, how to purchase Instagram. The purchase or acquisition was done, as we said earlier, with a combination of cash and stock, just like the corporate bank that helped Ford Motor Company finance a new Ford plant. Interestingly, however, in this financing deal, Facebook and Instagram didn't use an investment bank, but they managed the deal directly themselves. But remember, because this financing arrangement needed much more than the $20,000 or so that would be needed to buy one Mustang, they couldn't just go to a retail or commercial bank, but they would have needed to go to a corporate or investment bank. Instagram founders Mike and Kevin will need other services from a corporate bank because they now have more money than a local bank can handle in a basic checking and savings account. They have about $500 million. We'll talk about those services for these now wealthy individuals later. Let's now briefly discuss a few of the major roles on the corporate or investment banking side of the business, called Wall Street. For this conversation, I'm using corporate and investment banking interchangeably. We'll examine the roles of Wall Street professionals by continuing to look at Facebook's acquisition of Instagram. We'll look at the core areas of a Wall Street firm as a way to give you an idea of the roles and responsibilities, as well as the basic personality traits common for professionals within each role. We're hoping that this provides you with insight into how investment banks operate, but keep in mind we're really just giving you the basics. For more detailed information, you can check out the major investment banking firms' websites, as well as look at career sites such as vault.com. To lead us through the next section about Wall Street professionals is an actual Wall Street professional. Please welcome Mr. Silas Myers.
Thank you, Angel. I appreciate it. My name is Silas Myers, and I am the CEO and co-founder of Mar Vista Investment Partners. We're a Los Angeles-based registered investment advisor. We manage institutional accounts with a traditional style of large-cap growth. We manage almost $2 billion in assets. And just to give you a bit of sense of my background, I graduated from Harvard College, and I went directly to New York to work in investment banking at Merrill Lynch. It was a very long couple of years. It's a grueling yet very challenging and inspirational role. And basically I went to work for an investment management firm and decided to go back and get my MBA. Got my MBA from Harvard and went right to Los Angeles to work in the investment management business, which was my true passion, and ultimately worked for about 10 years as an investment analyst and portfolio manager, and eventually started my own firm. It'll be 6 years on November 1st, unbelievable, with 3 other partners, and we started basically with nothing, and now we're knocking on the door of $2 billion, and it's been an exciting ride. But just to give you a sense of what I do, we'll talk a little bit more about it later here in the call, but it's really just managing money for institutions that are trying to help their benefactors create wealth for their retirement. And it's institutions like a pension plan, like LA City employee retirement systems, or Cook County employees retirement system. Anything you can think of in terms of a retirement pension plan, or even a 401k plan with a mutual fund. We manage that money by picking what we feel are stocks that can create value for clients and holding them over time, such that they will have the appropriate amount of money in their accounts to retire when it's time. So that's essentially what I do in my background. I started the company because I thought it was the right timing, and of course, as soon as I did that, Lehman hit and the world turned. But it was a change, an interesting time to do it. But ultimately, we were able to ride it out and create some level of success. So I wanted to talk about some of the roles here on Wall Street, just to give you a sense of the opportunities that exist at current state here in Wall Street. So the first role and the core role I'll talk about is investment banker. We'll get to that in detail. Sales trader, research analyst, institutional investment manager like me, and then private wealth manager. So I just talk about investment banking. An investment banker is generally the type of person who is a good team player and willing to play his or her part on a deal team. A banker also needs to have strong analytical skills to assist with doing many company valuation and financial modeling. And he or she should enjoy networking and have strong communication skills to communicate with senior bankers and executives from the corporations that their bank is advising. A banker should enjoy working on projects or deals and be able to change their focus quickly. And that's definitely a key factor here as a banker. The work that a banker does to find out as much as he or she can about a company in order to offer good advice to a client is called due diligence. Remember that term, due diligence. You do your due diligence when you thoroughly assess a situation and make an informed decision or take an informed action. And remember that term. It's a very important term for investment banking. Bankers tend to be extroverts. They have strong personalities. And this one is definitely true. They're willing to work long hours to get the deal done. And for that, typically bankers are compensated very well. You see the list of some of the most prevalent qualities of a typical investment banker. They should just remember, like a good team player, the things here on the slide. And remember these, but they're not all inclusive. There are some other things that are important as well. In most company mergers, just to give you an example, the two companies would hire an investment banker to advise or structure the deal, such as determining how much the company is worth and how much stock to pay for that company, potentially, either cash or stock. And with the Facebook and Instagram deal, this is to go back to just the common example, was unique in that they didn't use an investment bank. But they completed the deal themselves internally. But typically, each side is advised by their own respective investment bank on how to structure a deal. Let's move on now to sales trader, and you'll see the requisite skill set there as well on the slide. And I'm sure all of you or some of you have owned a stock in a company, and a company that issues a stock or lets some members of the public own a part of the company by buying shares of the company is a public company, or it's called a publicly owned company. So if you can buy a stock on E-Trade or Schwab, TD Ameritrade, that's a publicly traded stock. A sales trader is a professional within the investment bank that buys and sells stock or trades stock. Corporations and individuals own stock or own a piece of the company, and the trader is a person who determines what stock to own and what stock to sell. And he or she manages that investment activity. Their job is to make as much money for their clients as possible. And they do this by buying stock for as little as possible and then selling it for as much as possible. Buy low and sell high. Or what did I say? Buy low and sell high. That's the principle you hear on the street. It is a fast-paced business. Thousands of stocks are trading hands every hour, and the volumes are very, very high, in the billions on a daily basis. Traders get a lot of their information from their gut, but they also get it from research. And there's a copious amount of research one can do on any given day. You may even have seen a typical view of a trading room floor as fast-paced, noisy environment, talking at the same time, and many people yelling all the time at each other. That's pretty true on any given day. Sales trading is a fast-paced environment. You make a decision to buy or sell, and then you do it. That's how it works. You just have to live with that decision, and then maybe you buy it back later or at a better price. But to work as a trader, though, you need to be a quick thinker and a risk taker, and able to talk fast and act fast. Sales traders need to be able to make quick decisions, maybe based on little information as well, and make the decision with conviction. Sometimes your decisions, your hunches, going in your gut, it's going to work out and make a lot of money. Sometimes it isn't. Just how it goes. A trader is able to quickly recuperate from a loss and not celebrate for too long if he or she makes a really good buy or sell, because there's always more stock to trade. There's always the next deal around the corner. Now, going back to the Facebook example, the trader's role in Facebook's purchase of Instagram would have been to help Facebook raise the money needed to buy Instagram by selling some of the company's stock or awarding stock to Instagram as part of the purchase. So let's move on now to research analysts again. You'll see here some of the skill set that is required for that. Completely different role than banker or trader. It's another part of the investment bank, the same side as the investment bank as the research division. A research analyst, as they are called on the street, are professionals who track companies in a specific industry and help to predict how the company will do in the future. This research information is used to make decisions about buying or selling company stock, or to help determine potential worth of a company or the potential risk of a company or an industry. Just quickly, I use a lot of sell-side research, and that's what this is called. Research analysts create sell-side research to help me understand companies and help me make stock decisions for my client portfolios. If you like being an expert in an industry or about a topic, you might like the research division. Your job as a research analyst is to financially analyze companies within an industry based on trends in popular culture, history, your knowledge of the industry, any other information you can find, quite frankly. Analysts make stock recommendations, call buy or sell recommendations. Research analysts focus on every kind of industry you can imagine, such as paper products, healthcare, tech, media, industrials, anything you can think of, there's coverage for it. In the Facebook deal, research reports about the online and social networking or technology industry may have been used to assess the potential future value of Instagram. For example, a research analyst in early 2012 commented that Instagram had become one of the most downloaded applications on the iPhone with 30 million users of Shorts, way more than that now. Other research would clearly show that the industry is exploding and it is predicted to be highly successful in the future. Reviewing the recommendation from any equity research analyst before buying or selling stock in any company or before finalizing a deal to buy a company is part of the due diligence process. Remember, we referenced that in the investment banker role. A research analyst needs to be able to connect the dots, see patterns, and make assumptions based on facts and future thinking. Essentially, they create forecasts and use those forecasts to determine the target price for a stock. It is someone who can typically work independently. I mean, it's a lot of work on your own. You have to be very intellectually curious, and like to focus on one thing or one sector, thoroughly research it. You typically don't move around. If you're working on telecom companies, you don't typically work on a healthcare company the next day. You tend to stay in the same industry. It's different somewhat on an investment banking role where you may juggle different industries as you're doing that particular job. Or a trader who makes quick decisions over and over in different stocks for different industries. A research analyst, they're ranked nationally based on the success of their stock picks. And they must have really strong writing skills. You do a lot of writing and have to be persuasive with that writing. So on to institutional investment manager, thing I do all day. The institutional manager is responsible for managing the money of individuals and institutions. This means that the manager makes the selection of investment options, monitors how those assets or the money is growing, and makes decisions about when to sell assets or sell stock. The money manager then develops an investment plan or an investment strategy and then executes that strategy. Basically, the money manager is the one who looks after the money. I mean, that's what we do. We're charged with full discretion of managing accounts for our clients. And we do that based on our own internally generated investment strategy, process, and philosophy. So I mentioned the employees of the City of Los Angeles. If you have a savings account with the Los Angeles City Employee Retirement System, you're an employee of that city, or it's called LACERS. You use those skills with the investment managers to look after these investments for these folks and to make sure that when you're ready to retire, basically, you have the money to do it. So that's what investment managers do on a day-to-day basis. A lot of work in terms of research, talking to company management teams, and generating financial forecasts. But it's a very intellectually challenging and rewarding job. ultimately I think has a good work-life balance and can be very lucrative as well. So some of the things I think an investment manager must have is a really high level of intellectual curiosity. It's one of the reasons I chose this profession was that I feel like every day is different, and every day I learn something new. So if you're really curious about learning and learning different things on a day-to-day basis, this is a good position for you. You have to be able to synthesize a lot of information and to make quick decisions when needed, and that's absolutely true. You're constantly bombarded with information, and you have to be confident. It's definitely a role where you're proven wrong, and it can be humbling, but you got to take good with the bad, and as long as you have a process, it's the process that matters more than the outcomes, and ultimately that will lead to good performance long term. And then we can talk a little bit about wealth managers, and this is a bit of a different role. It's really you're dealing with individuals, and it's called a private wealth management or private client services. So private wealth management, private client services is the actual area, and within that you're the private wealth manager or wealth manager within that particular group. The most important thing about this division is that the clients are mostly individuals. So I mentioned that earlier. Clients can also be private foundations or private family trusts, but mostly it's wealthy individuals, quite frankly. So remembering our friends Mike and Kevin from Instagram that started out that with nothing and created a $1 billion opportunity. When they first started their business, they probably did their banking in a local retail bank or a commercial bank that like the one that Angel talked about, and most of us keep our money in there in a savings account. Well, after selling their company for $1 billion, they now need to become a private client or an investment bank. The private wealth management division of an investment bank helps manage the money for private individuals, but only if the individual is wealthy, has money to manage that the retail bank can't hold, essentially. Generally, there is a $10 million minimum to be a private client, wealth management client at an investment bank. Some of them are actually even bigger. I think it's $25 million at Goldman. So you and I, at this point, maybe we want to keep our money in a retail bank, but that's typically how it works as they set the minimums. The wealth management division is a good example of how the investment bank provides full services to corporations. So from soup to nuts, basically. You finance it, you sell it, and you take the money from the sale and allow the private wealth management division to manage it. And after making a private individual a millionaire by arranging a deal, or a company, they help manage it with their division, and that they're usually lining that up coincidentally with anything they're doing on the deal side. So that's something that ultimately you don't want that individual to have that wealth created and go elsewhere with the capital. You want to be able to cross-sell that to them. If you are a private wealth manager, and you're essentially running your own business, it's very entrepreneurial. You get some clients from the business that your corporate bank does, but you're also able to, and expected to, quite frankly, source your own clients and bring them in, and there can be a lot of pressure brought to bear about that. And remember, your clients have to have at least $10 million in general to manage, so you'll need to have a good business plan to go out and meet and bring in these kinds of clients. It takes a lot of networking, hard work, and very smart strategy around that. Professionals who work in the division have an entrepreneurial spirit, as I mentioned, really strong sales skills too. They're really just salespeople with great analytical skills. Since it's all about networking to build your client base, this person has to be outgoing, personable, likable, and not afraid of cold calling. That's just picking up the phone, calling somebody you don't know, and asking them for money. That gets done every day. The position is much more entrepreneurial than others in the investment bank. Many people who choose this area have experience in some other sales roles. Typically, you come out of some sales role in a different industry or within the bank. It also helps if you have a niche. A good example of a niche is a young man who was a former professional athlete. He then goes to business school and becomes a private wealth manager. And since he had maintained contact with athletes and the managers and understand how athletes think, this became his niche. It's basically professional athletes, those who have done well financially as well. And many of these athletes are his clients, and then you've heard other athletes to him, and so on and so on. And that's how you build a business. And So I hope that that was a good, quick review for everybody on some of the roles out there in, in the investment world in Wall Street. And as Angel said at the beginning, I encourage you to review the websites of some of these individual investment banks to learn more about their businesses and reach out to folks that you know in those areas to give you some information and potentially meet with them and to learn more about what's going on. And you can see this on this slide here. This is a good example of some of the larger investment banks out there on Wall Street. So I have to leave right now, unfortunately, because I'm hosting another event in person for a professional organization that some of you may have heard of called the Council of Urban Professionals, or CUP. This organization, it's pretty exceptional, actually. It connects, empowers, and it mobilizes the next generation of business leaders. It was founded in 2007 with the idea of having 21st century leadership development throughout organizations, be those folks that are not as well represented historically. And there's 1,500 members strong, and the members work in finance, law, media, and other industries. And tonight we're going to launch at CUP Los Angeles, or Council of Urban Professionals Los Angeles, and I invite you to check out CUP, and I think it's something that will be very beneficial to you throughout your careers. Your recruiting opportunities, networking opportunities, that there can be very, very powerful, and I can't stress networking enough. They're also on Facebook, and this is something you should probably consider being a member of. So as I depart, I'd like to introduce another Wall Street professional who's currently working in the asset management business, and she will tell you a little bit about herself and her role. Please welcome to the call Adrienne Martinez.
Thank you, Silas. Am I audible? Can you guys hear me?
Yes, you can.
Perfect. Good luck tonight, Silas. Good evening, everyone. Thank you for being here tonight. As Silas said, my name is Adrienne Martinez, and I'm a client advisor with Deutsche Asset and Wealth Management. I began my career at Deutsche Bank immediately following graduating the Johnson School at Cornell with my MBA in 2008. And I'm actually a double Cornellian since I completed my undergraduate studies at Cornell in 2001. Prior to business school, I was working for the staff of the Riordan programs, actually, but I'm also an alum of the Riordan Fellows Program from 2004. And while in business school, I received a Toigo Foundation Fellowship, and I maintain my commitment to both of these phenomenal organizations, not just in participating in events like this, but through giving back. And I actually sit on the Toigo Alumni Endowment Board as well. When in business school, I spent the summer between my first and second year as a graduate summer intern in the investment office for the California Public Employees Retirement System, also known as CalPERS. And today, as a client advisor, I manage the bank's relationships with institutional investors. So similar to what Silas was sharing with you about his role, my clients are typically large endowments and foundations, corporate and public pension plans, central banks, and corporate treasury offices. And tying it back to something else that we have already covered tonight, my role would fall under that institutional investment manager slide where we talked about, or where Silas introduced you to career opportunities there earlier. My role, however, is on the distribution side of the business. So what typically falls under here is like sales, marketing, client service, and other business development activities, as opposed to the investment side of the business, which is a large part of what Silas does. And that's where you have the research analysts and portfolio managers. So this career move for me was very intentional. With the help of programs like the Riordan Fellows and the Toigo Fellows, I did a very intense personal inventory of my skills and abilities, and when I compared these with my interests and preferences, I found a role that I could successfully balance my interest in working with people instead of numbers and still be a part of an exciting and dynamic industry. I would encourage all of you to do a similar self-evaluation as you consider future change in your academic or personal careers. So I'm going to talk to you a little bit about some other careers. We've given you a very basic overview of some of the major roles in the financial services industry. However, there are many other niche roles within the industry that we won't have a whole lot of time to discuss, but I just wanted to highlight some of these tonight. Social or microfinance focuses on providing capital to underserved markets, especially communities and individuals in developing world. This financing provides lending opportunities that have a quick turnaround, and the goal is to reduce poverty, improve quality of living, and increase self-sufficiency. Another area is alternative investment, which typically includes investment practices such as private equity, venture capital, hedge funds, and real estate. All of these are alternatives to traditional public equity markets. And then finally, we have the international finance area, which represents any practice with a firm that participates in foreign investments, including banking, trading, investing, and even international private wealth management. So now I wanted to actually dispel a few of the Wall Street myths that some of you may have heard of by taking you through a few of these myths, and we're going to discuss whether they are fact or fiction. Corporate CEOs and other business leaders are all Ivy League. Fiction. 90% of CEOs today's top 500 companies receive their degrees from large state universities or small private colleges. This is one of the reasons why the Riordan programs and the Toigo Foundation are branching out. We're looking for promising students at institutions beyond the Ivy League schools. We know that there is a lot of talent at other schools across the nation. Myth. Minorities are in the minority on Wall Street. This is a fact. But Wall Street firms are committed to hiring and retaining diverse talent. Yes, it's true that minority professionals are definitely in the minority on Wall Street, but one of the challenges is to encourage more young professionals of color to pursue finance as a career path. Some studies show that some studies show that there are twice as many minority students enrolled in law and medical schools as there are in MBA programs. Why is that? We believe it's because of a lack of role models. And it's also because of a lack of students who fully understand the potential that a career in finance represents. That's the goal of this webinar, to educate and encourage minority students and minority professionals about exciting career possibilities on Wall Street. So yes, our numbers are low, but if you all do the work and preparation, you do have a chance to work in this industry. And Wall Street firms are committed to hiring and retaining diverse talent to make their firms more competitive. Myth. Virtually all Wall Street professionals major in business or economics. Liberal arts majors need not apply. This is fiction. You can pursue a career on Wall Street with any major. What is important is your aptitude, critical thinking skills, interest, and interpersonal skills. Silas covered a lot of these during his presentation as he talked about the various areas within financial services. So as you go back and think about some of those skill sets and matching them with what you have an interest in, remember that it's not about your major. Liberal arts majors are hired all the time. I see them in Deutsche Bank. Traditionally, many of the new enrollees in MBA programs that are pursuing finance as career changers are coming from fields of engineering, healthcare, and technology. So it really comes back to what your strengths and traits and abilities are. You will probably find more finance and economic majors on Wall Street. That's true, but that's because they have always had an interest in the industry. You can join from any background. So this is all the time that we have for some myths and dispelling those myths. But I'm going to turn it back over to Maureen now, because she's going to take you through a few more thoughts here.
Thank you, Adrienne. And can everyone hear me?
Yes.
Yep.
Okay, thank you. So now you've heard a little bit about the different career paths on Wall Street, heard from a few professionals, and uncovered some of the myths. We hope that we've piqued your interest. Now you're probably wondering what you need to do to get there. Firms are looking for interesting people with an interesting story to tell. What exactly does this mean? It means that you should begin early by exploring the opportunities that really interest you, from the classes that you choose to take to the extracurricular activities in your school and community in which you participate. If you're excited about what you're doing, and if you're interested in what you're doing, it will definitely show, and you will naturally take on leadership positions because you genuinely care about what you're doing. If you already graduated and are working, there are many professionals and community organizations that you can join now and participate in now to develop your skills and build your professional network. If you are still in school, you should also think about taking advantage of investment banking internship opportunities. These opportunities will let you experience what it is like to work on Wall Street and will provide you with a great network of industry professionals who can help guide you and provide insights that will help you along your path. These opportunities will also allow you to evaluate what skills you might need. Now, if I can just stop for a moment and share with you my experience. I actually started off my career with an internship. I was in my senior year of college when I decided to apply and accept a non-paid internship with Merrill Lynch. The internship program at the time offered school credits but was not paid. At the time, many of my colleagues didn't understand why I decided to invest 3 months of my life to work for free. Since I was also already employed at the time, I had to work the internship hours around my current job and class schedule, so as you can imagine, I was pretty busy. Although the internship was unpaid, I was gaining valuable experience and making great connections in the process. Not to mention, I was also creating a platform where I could showcase my value and my skills. So my non-paid internship eventually turned into the paid career role that I am in now. Merrill Lynch recently revamped their internship program and now pays interns in addition to giving school credits. So many other firms also offer paid internships as well. This is definitely an improvement and even more incentive for you to take advantage of creating this network. And while we're talking about networks, I also wanted to point out all the natural networks around you now that you should tap into. Some of those include your family, your peers, your alumni networks, community networks, and professional networks. Build your networks now. You'd be surprised how much information, guidance, and other connections they'll be able to offer you. Then when you're ready to interview with companies, really take the time to prepare for your interview. Do as much research as you can and find out as much as you can about the position that you're interviewing for. Find out as much as you can about the company, about the lingo, about the people who work there, and anything else that you can think of. Once you've done that, really think about your story and how you've gotten to this point, what you have to offer, and how you will fit in at the firm. And then lastly, practice interviewing as much as you can. Use your school's career center, your coworkers, your friends, and even your family. Being comfortable communicating your story and being prepared will go a long way. Both Riordan and Toigo want you to not only think about a career on Wall Street, but also to think about your career and level of thinking, taking your career and level of thinking to the next level. We want you to think about the MBA. You will encounter increasingly more complex problems and situations, have more responsibilities, and have a broader perspective on your career, the finance industry, and the world. The MBA will provide you with the skills, network, and support that you will need to be a better professional while giving you the opportunity to just take a step back and think about your career and industry and the industry in which you work on an intellectual level. This will give you additional perspective as you re-enter the workplace after the MBA. In preparing yourself for an MBA program and the admissions process, you will want to, again, do your research and really take the time to prepare. You might consider enrolling into a program like the Riordan MBA Fellowship Program at UCLA to help you with this process. Take a close look at the different MBA programs out there and really think about which ones will be the best fit. Prepare for the GMAT, which is the standardized test that you will have to take to get into the business school. Take a prep course or visit www.mba.com for real GMAT practice questions. It's a test that you'll have to study for to do well, so make sure you give yourself enough time to do so. Also, consider taking the GMAT right after you graduate from college rather than waiting. At that time, you're still in study mode and your score is good for 5 years. Start thinking about your story once again and how business school fits into that unique story. Make a list of various accomplishments and things that you are proud of at your job so that you can provide a gentle reminder to your supervisor or boss when it comes time to ask for a recommendation. And then finally, start thinking about your scholarship opportunities. Start thinking about applying for scholarship opportunities out there. There are a number of different organizations that provide support for minority students who are thinking along the path of business school. Here are just a few organizations and resources out there to help you navigate a career on Wall Street and the MBA process. As we mentioned before, there are a number of scholarship opportunities out there. Some are through the large investment banks themselves, and you should check out their websites. But there are also many other organizations like SEO, which is Sponsors for Educational Opportunity, that help place talented students of color into valuable summer internships with Wall Street firms. Organizations like the National Black MBA Association and the National Society of Hispanic MBAs are essentially professional organizations that are there to provide a support system and a network for individuals in business. They provide a number of different resources from networking opportunities and career fairs to leadership development programs and scholarships. The Forte Foundation is a similar organization, but one that helps women in particular prepare for the MBA and navigate the admission process and the MBA program itself. MLT, also known as Management Leadership for Tomorrow, is the premier career development institution that equips high-potential minorities with the key ingredients to successfully getting admitted to business school. The STU Fund, which is the Student Funding Group, provides resources and knowledge about career planning, educational planning, paying for school, and financial literacy. STU Fund also has its own full-service, independent, minority-owned financial advisory firm. And then finally, the Los Angeles Urban League of Young Professionals. They are committed to corporate, social, and community activism as well as to improving LA's African-American business climate through networking and business development.
And hi, this is Angel Stewart again. There's also the Robert Toigo Foundation. Toigo provides a fellowship program for incoming minority students to prepare them for successful careers, specifically in finance. The program provides you with different resources and support, including tuition assistance, mentoring, and career services. Toigo has approximately 1,000 alumni as a part of its network, including Silas and Adrienne that you heard from earlier tonight. Toigo provides advising assistance to its alumni for the rest of their careers, i.e. forever, and many firms on Wall Street seek out Toigo when they need to hire talent. So if you're thinking about enrolling in an MBA program for the fall of 2014, the application for the Toigo Foundation is available now. Please check out our website at toigofoundation.org. I'll turn it back over to Maureen now to discuss the Riordan program.
Thank you, Angel. And lastly, we have the Riordan programs at UCLA Anderson School of Management. The Riordan program provides leadership and management training to diverse individuals all over the country. The Scholars Program, College to Career Program, and MBA Fellows Program develop tomorrow's leaders by providing a transformational experience through the use of mentors, educational workshops, and community service. Alumni have made significant contributions to their communities and achieved great success in the business world. Additionally, the Riordan Program's Alumni Association has a Saturday Business Academy which provides mentorship, college prep, financial literacy, and both college and career exposure for high school juniors and seniors. To learn more about the Riordan programs at UCLA, you do a Google search for the keyword Riordan programs. To learn more about the Saturday Business Academy, please Google the keyword Saturday Business Academy. We would like to now open the floor for just a few questions. Please type your questions to the presenters using the chat section. If you take a look at the top right of the chat section, you should see an arrow that expands to a drop-down menu. There should be an option for you to start chat with presenters. This will open a new chat section for you to type directly to the presenters instead of to everyone. We will select a few questions to read and answer as time allows. Remember, following this call, we will send out information to all registered participants, listing the organizations and the resources that we discussed on the webinar today. I will now pass it over to Angel to read our first question.
Okay, as Maureen said, we don't have a lot of time for questions, so we'll try to answer what we can, but we certainly encourage you to follow up with Maureen and myself directly on LinkedIn or with me on Twitter for other questions. So I'm going to just pick out a few questions randomly, and we'll try to get these answered. So the first question that I see here, is it really possible for someone with an undergraduate major in liberal arts or science and then a career path completely outside of finance to successfully begin a career in finance? I'll answer that one as a recruiter, and I might get a comment from Adrienne. Yes, it is. I've been a recruiter for many years, places like Morgan Stanley and Goldman Sachs, and we very, very often hire students who are coming from different arenas. Some have been teaching, some have been in marketing roles, some have been in engineering or technology roles. And regarding their undergraduate GPAs, when you combine your undergraduate GPA with your postgraduate work experience and professional networks and community involvement, all of that is taken into consideration when you apply to business school. And so it's not just about who you were right when you came out of college, it's about what you've done since then that's going to help you get into business school. Adrienne, do you have anything to add?
Yeah, I would just stress the point about making a demonstrated interest in wanting to make either a career change or a chosen career field that is different than what maybe you studied. And you can do that by doing some of the things that Angel had mentioned. And for those who have interest in specific areas of finance, it's very important that you talk to people who are in those industries so you can get a sense of, in those roles so you can get a sense of what you would need to do and what you would need to demonstrate in order to be successful in recruiting.
Great. Thank you. And now that it's already 10 o'clock, so I'm just going to really read one more question and then, again, invite you to follow up with us as you need to, and certainly wait for the resources that we're going to send out. So actually, there's two questions I think we're going to put into this one. And that question is there a chance to enter the finance industry if you don't attend one of the major MBA programs? And then the other question there is what is one of the best MBA programs to enter the finance careers that we talked about? So, Adrienne, even though both you and Silas went to Ivy League schools, would you say that you do other people working in finance at Deutsche Bank and at CalPERS when you were there that didn't go to one of those Ivy League business schools or undergrad?
Yeah, absolutely. In fact, even though a lot of the large institutions will have specific relationships with universities, it's still not impossible to get your foot in the door. And in fact, I know of a couple of firms that actually have started recruiting events for non-core, what's called non-core schools, core schools being those ones that they have direct recruiting relationships with. So it's totally possible. And just to give you sort of a hard example, the summer intern class of Analyst and MBA associates from last summer at Deutsche, I think more than half of them came from non-core schools.
Okay, that's true. And I'll definitely agree with that. There are certainly the major banks look. Definitely. If you were not on LinkedIn and you are a college student or a young working professional, you need to have a LinkedIn account. And in our business world now and social media, every professional needs to be represented on LinkedIn. If you're talking to a recruiter, if you're talking to a business school person, as they're talking to you, they're going to look you up on LinkedIn. So make sure you get a LinkedIn account. That's where you're going to post what you're doing now, whether you're in school or if you're working, where you're working now. And it's really your professional face is going to be on LinkedIn. And then you will connect, you will link with other professionals, and that is your network, your professional network. So make sure, following this call, that you look up Maureen and I. There are our names. You simply look us up by name and ask us to connect with you on LinkedIn. It's kind of like the professional adult Facebook, but remember, it's professional, so you post professional photo of you and keep it very professional. Also, feel free to direct any other follow-up questions or information or comments to me at my brand new Twitter account, which is Angel Stewart NYC. Okay?
Thank you, everyone, again for those great questions. Please remember you can seek additional resources on Google, Twitter, Facebook, and LinkedIn for job and internship opportunities. I'll leave you with the following two quotes. Know where to find information and how to use it. That's the secret of success. And secondly, work hard to get where you're going, but when you get there, remember to reach back. Thank you for listening. We sincerely hope that you've learned something and that we have helped you think about where to take your career.
Good night.
And that concludes the call for today. Thank you, everyone.